Hi, Victor. Welcome.
Hey, how you doing?
Morning. Victor is a real estate investor in Gainesville, Florida. Victor focuses on house flipping and projects to flip 30 houses this year. He also spends time mentoring new investors with their real estate business. So, welcome. We can't wait to hear what you have to say. And today's topic.
Well, excited to be here and happy to share what I have to know.
Cool. Yeah, so Victor, you're actually the only investor on the panel today. And I mean, I know your business because we've flipped a lot of houses. And the question I was thinking of, like, how do we relate this to an investor? But really, you are your own client. And it is a very competitive market. Mostly because there's just no inventory. So a couple different ways, and I know you do some mentorship with either new or aspiring real estate investors looking to get their first flip project down. So twofold. One, how are you preparing yourself to in this low inventory market? And then maybe we can get to how are you preparing these folks that you're mentoring as they're going out in their marketplace, because every marketplace is different. Yeah, and then I want you to think about this too, because we can go a different angle with it on the buy side and the sell, because I mean they're both unique challenges. So go for it.
Oh, for sure. So to answer your last question first, as a flipper, we're on both sides of it. We buy a property and we sell a property. And my theory is it's always the same amount of difficulty for a flipper, but it's either very hard to buy a house, but super easy to sell it, or vice versa, or some sort of permutation of that. So I think that's what's going on now. We're really, really hard to buy something, but as soon as we list something, full offer, multiple offers within a couple days, which is exciting to say the least. So what I've seen in terms of a lot of success, we've been going more and more rural. So instead of like doing big cities or like major markets, Gainesville itself, I think of it as a secondary market. So we've been expanding even further, like more into the city, or more into the rural area, smaller towns like Hawthorne, Alachua, Archer. Like these are smaller cities, like 10 to 50,000 population. So we've seen a lot of success there. There's a lot less competition. We're able to get deals. And again, even those rural cities, first week things are getting sold and full asking, and we're just having a ton of success doing that.
Are you still finding the same level of competition, or maybe not same level, but it's probably still pretty competitive in those markets? Because yes, they're smaller. There's less competition in number, but by percentage, they're still probably pretty competitive themselves, right?
Yeah, it is still super competitive, even for the small markets. So that's always a surprise to me. So it's super competitive. I was looking at the numbers for Florida active inventory. So about a year ago this time, it was 137,000 houses on the market. Now it's down to 53,000 houses for Florida. So it's like down by 2/3. So like inventory, we're seeing an inventory shortage here as well.
Correct. Okay, so now one thing that because we did the same thing in Houston. Like Houston's just, I will say, it's like a feeding frenzy of like sharks. So we're like, hey, look, one, the path of progress, like that's always good to invest in. Two, this wasn't planned, but the COVID effect, like if you can work from home, maybe you go out and save yourself a little bit of money, not having to pay the big city home prices. And then three, there's, it's just less competitive because fewer folks at the time were investing out there. Now this is all pre-COVID. So one thing that we found was those smaller markets, they weren't used to being marketed to like the inner city or just the more metro areas. Like I'd get rentals, like, we get postcards and cold calls and texts all the time on our rentals. They weren't used to that. I don't know. Have you found that? And how is the conversation, if at all, is it any different than when you're having those conversations in the the metro areas of your main market?
Yeah, no, it's a totally different conversation. So I'll liken it when I got started in Gainesville as a market. I got started like 2018, and there was like 2 wholesalers there, and they're both part-time. And now there's like 20 wholesalers in Gainesville.
Sounds right.
Back then, yeah, exactly. And back then in 2018, I'd cold call, or I'd do a specific marketing method and talk to a seller, and they're like, "Oh, you're the only person who's called me like this year about the property. Like you're the only person who's contacted me this year about the property." And that was a good feeling, because if you're the only person, then you have a lot more negotiating room, a lot more negotiating power. Like there's a lot more you can do in that. I've started to see that shift to the smaller markets, where in those smaller markets, like they're like, "Oh, I haven't had a lot of people talk to me about this property," or I don't know, they just don't know that it's as hot as a market over there. So I've definitely seen that, where it's even in Gainesville, it's hard to get deals, and that's a much smaller town. So the conversations in those rural areas are definitely much better, more quality conversations. It's not like they're getting bombarded by a dozen people who all want their property.
So I know from a sell side, like this is the best market you could ever be in, and hope for a flipper. So for the buy side, working with other investors, that it's just hard to get deals. It is. I mean, you said like 2/3 in Florida off the market. The Houston number just came out for April, and it's 57% fewer inventory. So so you have more investors, fewer properties by a large margin.
Yeah.
So how are you preparing the folks that you're working with to be unique, be diligent, and get out there and ultimately get a good deal?
Mm-hmm. Yeah, I recommend. So the first thing I recommend is focus on those smaller markets. Look at those smaller markets. If you're in Miami, don't necessarily start in Miami, is my first tip. Second tip, it is still a numbers game. So typically on average for me, it's like 1 out of 15 offers becomes a deal. And that still holds true, even if it is competitive. So just, lean into the numbers, and you'll be successful that way. So just realize like you have to put in the offers, even if it is competitive, but you'll still get transactions. And my students are still doing that. Third thing I mentioned, not a lot of people do this, and they should. Follow-up. Follow-up is so key. Follow-up is where you get the deal. So on average for me, it takes 10 follow-ups to get a deal. And that's a text, that's a voicemail, that's a call, maybe that's an email, but that's like 10 touches to actually get a deal. And your average investor out there maybe does like 1, maybe 2. If they did 3, that'd be a stretch. So if you're out there following up, I mean, you're going to definitely put yourself above and beyond like everyone else, just because nobody else is following up. So if you follow up 10, 15, 20 times with someone, obviously there has to be some interest there. It's not like following up and they don't want to sell their house, but following up and that consistent, they're gonna be like, well, this person really wants it. This person is the real deal. So you really be separated from the pack in that sense.
In the last 60 seconds on the follow-up, are you doing anything special with the follow-up, or is this just a communication touch? Is it a targeted, like, hey, you're ready to sell your house now? Anything special there that you're finding effective?
Nothing really. I would just keep at it. Even if they don't respond, what I've found is like you hit them up every week, or some sort of, distinct pattern that makes sense. So you hit them up every week, then maybe a month later they get back to you. They're like, hey, things have been busy. I'm still interested. I don't think there's anything magic in like my follow-up. It's just like, hey, wanted to check in. Hey, wanted to see how you're doing. How do you have any thoughts about the offer? Like simple conversation starters. I don't think there's any magic sauce that I have.
Okay, sounds good. I think we may have like 1 more minute. So on the sell side, things are high. How are you managing the expectations you have on? So, okay, now I'll phrase it this way. I have absolutely accepted an offer and then got multiple offers higher than that right afterwards. And I thought I was doing good due diligence up front. So have you done anything unique in how you're managing your expectations and how you're going to ultimately accept that offer in this just crazy market to make sure that you're both getting a good buyer and make sure you're maximizing your potential on the deal?
I think the biggest thing is just clear communication. So if you have multiple showings, if you get an offer in hand, you tell everyone you have an offer in hand. As soon as you sign an offer, what I've been doing is just cutting it off. No one else can see it. We typically don't do backup offers, but that's just how we do it. So that's typically how I do it. Just clear communication. Luckily, I mean, we get multiple offers, and then we pick through the offers. It's not just like who's the highest, but we also like get a sense of Are they going to be a good fit for the property? Because I don't want to just get the highest offer, then they back out or falls out of contract. We have to list it again. That's happened a lot. Or like they get the highest price and then it doesn't appraise, and they're like, well, we got to lower the price. Sorry. So that's happened.
Clark, are you handling those expectations up front? Like, are you on price? Hey, they offer $15,000 over list, and are you saying, hey, look, we've got multiple offers. They're actually close to yours. You're higher. Do you have the cash in the case this doesn't appraise? Like, are you having those kind of conversations?
Yeah, we have those kinds of conversations. A lot of our, like half our buyers, like FHA, so typically they don't have cash, or they don't have that extra money. But we just handle that up front, and just having that discussion, like, hey, we have multiple offers. I know you guys want this place. Just understanding where they're coming from. Understanding their motivation for the place.
Yeah, because I know. Okay, yeah. Well, we'll leave it at that, because that's important to take in consideration. The last thing you want is a buyer who may be qualified at prices lower, than you lose $15,000 in equity when buyer B had the cash and they were ready to go. So, hey, thanks, Victor. I look forward to maybe hanging out sometime. But definitely been following you and your success. I love flipping houses. So what you're doing is great.
Awesome. Well, thanks so much for having me.
Yes, great input. Awesome. Thanks, Victor.